Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the markets. That is the crypto market, the metals market, the stock market, the NFT market, and how to make some or hopefully a lot of money on the internet, or at a minimum, let's not lose all of our money in the markets. Red day across the board. We'll talk about it today. We've got Bitcoin falling to 77K as Binance initiates their first $100 million buy, but that was after $5 billion of liquidations in the last 4 days. We had the Wall Street Journal reporting Trump's World Liberty Financial signed an agreement for $500 million investment from Abu Dhabi investment vehicle 4 days before the inauguration. I don't think people felt too good about that either. And then finally, Tom Lee's BitMine ETH position is now down over $6.9 billion with the huge move down in ETH over the weekend. Brett will explain what's going on there and some thoughts on that. We also got the latest on price action, general market thoughts as usual. So stay tuned for that. I'm delighted to say I've got Legendary and Brett in the co-host seat with me today. We are ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very risky, as we are experiencing today and over the weekend. So do proceed with caution and exercise your judgment at all times. With that out of the way, it's Monday. It's the 2nd of February. Legendary, how are you doing? How are you feeling? How are you keeping with the market down so much? I'm conscious that a lot of people might be feeling it a little bit today. How are things your side?
GM Jim, I am doing quite well. Currently traveling, so hence my travel setup, which seems to work fine. So that is one thing to be happy about. In terms of the actual market, what I did this morning is I opened Drops tab or CoinMarketCap. I looked at it and I closed it again. So this is how I'm currently dealing with the crypto side of the market. But to give you a serious answer, it is a very, very tough market. There's a ton of volatility. So you either trade that or you have a long-term thesis and then you ignore the volatility, or you do both if you want to do both. But just look at the gold price alone. Gold dumped to 4.4K, but did a V-shaped recovery back to 4.8K, which from the 4.4K bottom is essentially up 10% after it dumped more than $1,000 from its high at 5.5K. What I reflected on, I looked at last week's thumbnails. Always do like a review of what's going on our YouTube channel analytics, how we can improve on that, work on that. And what I saw is that I think we had 3 or 4 times in a row, gold is climbing, hype is climbing, gold is climbing, hype is climbing as BTC is dumping.
Interesting.
And typically we do say that, right? When we have the same headline 2 days, 3 days in a row, it's time for a reversion. Now we almost had it 5 times in a row. So that reversion was a bit larger than expected. In terms of what I do portfolio-wise, I don't really have perp trades open right now. I think we've all seen that over the weekend. Liquidity is pretty limited compared to regular weekdays. Some participants are not around to trade. So if bad things are to happen, they do happen on the weekend. So I'm not really interested in perp trading right now. And even if I were, I'd prefer to not do that on the weekend, but rather throughout the week and close positions on the weekend. So this is how I'm trading this market, aka not trading these short-term swings, but keeping my long-term bags.
Okay, I think you said some really important, maybe there's 2 or 3 important things that you mentioned there, which I think will be helpful to set up the conversation. And Brett, I'm going to come to you for some thoughts on how to cope with market conditions like this, especially if your portfolio is not in necessarily the place that you'd like it to be. But I think first, Legendary, maybe preceding some of the points that you made, is that we went risk off in the summer. Like, we've been preaching risk off from the summer. There was so many crazy things happening. We were just selling routinely. Who knows where the top is? I don't even know if I caught the top or not. In fact, I know that I didn't on Bitcoin, for example, and I was close to the top on some other assets, but we've been preaching that for some time. So it's against that context, which is we were going risk off for some time, which makes it easier to deal with the drawdowns, because when we're talking about drawdowns now for our exposure, it's a far smaller proportion of the overall portfolio. So yes, like, we're still getting hit for the parts that we still have, but it's a far smaller part of the portfolio. And that is beneficial because of what was done before. And so the second thing I think you mentioned, Ledge, is that just like not well, you got two options. You can either just switch off, not participate. That's one way you're doing it. And then the other thing, though, actually, which I think is helpful, and maybe if you've been in this industry a while and you know a bunch of people in the industry, but in our pre-call just before the show for 20 minutes, however long we do it, you just ask me, like, is everything okay? I think it's really nice and a good thing to do, to reach out to the people who you know and who are, who you've been in this industry for a long time with, and just check in and make sure that they're doing all right. Sometimes people chop themselves up. Sometimes people rage trade things away. This is a choppy market, exceptionally volatile. You could do things that you really will look back and think, why did I even do that? So I think it's really helpful to reach out to people and just ask the question, check in, make sure they're okay. So I appreciated that a lot. On my side, I've been, I do have perps exposure. I'm generally short the market at the moment. I stayed short Oracle over the weekend. That was a good move. And I added some more short exposure to the S&P because I think, we're at highs, and I feel like it's a decent way to hedge. It's not because I think the market is necessarily going to tank. It's just it's a way to get some insurance, as I used to talk about when I wanted to go short before. So I think that's helpful from my side. And again, hope you guys are doing okay out there. It's a tough time. Reach out to your friends who have been in the position. Ledge, do you want to come back on something before I go to Brad?
Yeah, quick follow-up question for you. Current trading setup. When you say you're shorting the S&P, you're still on Trade XYZ, you're on Ostium. What's the trading venue of your choice right now?
So I am using Trade XYZ. I am using Ostium, but I'm short the XYZ. Is it called the XYZ? The top 100 non-financial.
Oh, the yeah, the XYZ
like the
100,
XYZ
yeah.
100 or something. I just thought I'm going to put some additional exposure there. So that's my point of choice. But to be clear, guys, that could be changed by tomorrow. Like some of my shorts are very short time frame. Sometimes I keep them on as insurance. Sometimes I take them off. It's not, because at a minimum, I think, well, maybe I'm just farming the protocol. If I'm up $20 one day, I might just take it off, depending on how I feel like. So these are not necessarily long-term things. Brad, coming to you, my man. How are things your side? How are things? What's your kind of feeling on the market at the moment? How people might be coping with it? You are on mute at the moment. Oh, you are not on mute, but I can't hear you. Can you hear him, Ledge?
I cannot hear Brad.
We cannot hear Brad. Oxy can also not hear Brad. See people in spaces they can't hear you. This is your AI agent, Brad. You're letting them wild on your computer. Can
you hear me?
Messing with you.
Yeah, Brad's back. There we go.
Okay.
Get those agents.
I didn't change a thing. It literally just said no audio. I just my things opted for
your agent heard Paycheck criticizing your setup. He was like, "Fuck, he called me. I need to."
Machine. It's Crumb, first of all, and I'm happy to report I've upgraded to Crumbs. I have a group of them that run together now. Yeah, so I'm happy to report that my superpower and my curse persists. I had no idea the market was even having issues. Not a one. So like, I'm sure my portfolio is not looking great, but I also can't be bothered. Honestly, like
Your portfolio situation is like that thing they say about the tree. Like if the tree falls down in a forest, but no one's there to hear it, did it fall?
Yeah. If my portfolio goes down 10% and I didn't realize it, does anyone panic? I don't, but other people do probably.
That is your
I don't know, man. Like, so yeah, there's just like there's enough going on right now that I'm like, outside of like the crypto stuff, which man, dude, make these mainnets in 10 days. Like, right, can't be arsed right now. I haven't been able to be arsed for the last 2 months, and then like with the agent stuff, CloudBot and everything else. I have so much FOMO for building and having fun doing cool shit that like money just does not. It just doesn't do it for me. And then like, Brad, your portfolio is nuked. If you maximize for it, you'd be a gajillion billionaire. And I'm like, you know what, man? Like, you know what also is true had I not touched a lot of the stuff that I had bought 7 years ago, I'd probably be in a better position than I would be right now. So like I find ultimate Zen, and that's also true in the opposite direction. There are things that I've let go to zero, which, you know, would have made even more money, right? So it swings both ways. It's just, man, I can't optimize for, I can't optimize for dollars. My brain doesn't work that way. I don't really give a shit. I'm above a threshold that makes me happy, and I'm finding other stuff that keeps me curious.
Love to hear that. Love to hear that perspective. We're going to talk more of these tactics and ways of thinking about the portfolio in a little bit today. I think it's an important day to do that. I saw a lot of people in our Telegram chat going through something or other, whether it's experiencing a humongous drawdown, whether even it's just like trading these choppy, volatile conditions. So we'll share some thoughts on that in a little bit. But before we get there, let's get to the main headlines and price action to get you up to speed with everything that you need to know from the weekend, basically. So starting with the price action, as always, we have Bitcoin down 1% to 77.7K. Gosh, that feels horrible to say, starting with a 7, down 11% on the week. ETH is down 5% to 2.2, down 20% on the week. BNB is down 1% to 764. Sol is down 2% to 102. We have Hyperliquid, however, flat, $31, rock solid. The only one of our alternative majors doing wonderful, up 40% on the week. Absolutely incredible. Getting into the meme coin side of things, Doge is flat. Pepe is down a couple of percent. Pump is down 5%. Bonk is down 1%. Pengu's down a couple of percent. Hang on, I'm going to press refresh again because this is the second time I'm pressing refresh on the meme token page, because I'm thinking, how can all the majors be down more than the memes? It doesn't make any sense. So SPX is, yeah, this is correct. SPX is flat. Fartcoin's flat. What on earth is going on? Rect is down 4%. This is, all right. So memes and crypto are just decoupled, and memes just kind of do whatever they want now, it looks like, when the majors are down more than the memes. Okay, interesting data point. I'll ask the boys about that in a moment. Getting into the headlines themselves, yes, we'll be talking Bitcoin's big move down. Binance has initiated their first $100 million buy out of their $1 billion fund to allocate into Bitcoin. But that is after $5 billion of liquidations in the last 4 days. We had the Wall Street Journal reporting that Trump's World Liberty Financial signed an agreement for $500 million investment from an Abu Dhabi investment vehicle 4 days before the inauguration. I think that's left a bad taste in a lot of people's mouths in the industry, as the kind of allegations of corruption has surfaced. Tom Lee's BitMine ETH position is down over $6.9 billion as well. We'll talk with Brett about what's going on with ETH as well. Notable price action. Sol broke beneath $100 before it just crept back over. That's a pretty big move down. The Malt meme token is down 26% to 46 mil after it ran to more than 80. I think that was on Friday or Saturday. Really interesting price action. Stable. You remember the second stablecoin chain is up 20% to 2.7 bill. Was it 270 or I don't know. I'm not sure which number that is. Maybe I need to double check that. Jupiter announced $35 million strategic investment in Jupe at market price from Parify Capital. Hyperliquid is testing native prediction markets on its testnet. That was pretty interesting to see. I think a lot of chains will be interested to know that Hype is building native prediction markets now in testnet. Hyperliquid Whale loses $250 million after building up a 700 mil ETH long position. Polymarket's going to get integrated into Jupiter on Solana. Hyperliquid announced a unified account mode as well, so no more need to swap between spot and perp accounts. The Rainbow token auction begins today on Uniswap and finishes on Thursday, the 5th of February. I'll be interested to just see what the kind of demand is for that in this kind of market conditions. Infinex TG'd on Friday, and we were talking about it on the show. We had Kane on the show. But it TG'd after the show on Friday. It came out at around a 200 mil FDV, and has since declined to around 150, 160. So really, really tough conditions now for teams launching their tokens. And then finally, Story Protocol announces the proposal to change tokenomics to delay any new liquidity from locked tokens by 6 months. So a bit of a delay there. Interesting. So that's the update to get you up to speed with everything that you need to know from the past 48 hours. Coming to you, Legendary, first to get some insight into what you are finding interesting or what is catching your attention. Then want to go to Bread. Then want to maybe just talk just trading the market a little bit as well. What are you thinking?
Yeah, then you'll like what I want to touch on because it perfectly ties into that. And this is the Hyperliquid testing native prediction markets, because that opens up very, very interesting possibilities, especially if they hook that up to the API as well, to either build hedged positions of some sorts. If you think this is going to happen, you have your gold long open, but you want to hedge it with some sort of prediction on the other side.
That would be good.
That could be pretty cool. Could be a more sophisticated way even to set a stop loss if you wanted to do that. So that is something that I would find especially interesting. Also from the perspective that I would assume that if this works well and Hyperliquid is the place where liquidity lives, a lot of liquidity could flow to these markets. Because with poly markets, sometimes the issue still is, and same with Kalshi. Yes, both of them done an amazing job of catering to people using the platforms, but a lot of the volume is, unsurprisingly, it's not criticism concentrated on the more popular bets. So you will have the marginal bets, which I find interesting, and then they're like, man, there's like 10K of volume or 15K of volume in there. And very few markets have enough size that you can use them as a significant hedge. And the order book is horrible. You often can't do your market betting there. You have to place limit orders if you want to get into a bigger position, because otherwise you will push these odds around way too much. So I'd be very curious to see. I didn't look into how it's working on testnet, how they're solving for the order flow, and how what their setup for that is. But I would love to see a Hyperliquid integrated prediction market, because A, I think interesting to hedge, B, could attract cool liquidity, and C, maybe the order book is a bit deeper than it would be on the traditional prediction platforms.
That's a really, really interesting point. I hadn't really thought through the implications. The liquidity issue, I don't know. My understanding is it's really hard to provide the liquidity for these markets, and sometimes they're very, very unprofitable because they're trying to provide liquidity to markets, which sometimes it actually might not make sense, or at least a certain time in the bet, it might not make sense to provide liquidity on the other side. So I don't know whether you can have super deep ones unless they're really, really popular. But I agree with you entirely that if they can create like a really interesting interface, because as you said, the liquidity lives there anyway, because people are trading there so much. If they can find a cool way to integrate it and make it very, very logical to just flip between the two, that would be a big onboarding moment for prediction markets on Hype, or the official prediction market, even if that's how they're building it. So that is pretty interesting. Brad, do you have any view on prediction markets? What's like, do you have an updated thought? I know you got, I would guess that something prediction market related, given that it's such a popular thing, might be coming on Mega. Do you have a view on the state of prediction markets, and then what else is catching your attention? You can go straight into it.
Yeah, I'd actually pulled that forward as something to mention for me as well. So like, yeah, we will. We don't have like a traditional one. We don't have like a poly market clone. Rocket is coming Q1, Q2-ish. And there'll be a flavor of prediction markets, not exactly a one-to-one. But the thing that's interesting to me for that is I've been talking to a lot of projects, and I'm actually realized that there has been an uptick in the like famed, spoken about exotic hedging angle that prediction markets usually are not used to have a narrative around. And for people listening, exotic hedging is like, man, there's a farmer who wants to like save himself from the coming season. Therefore, he buys, no, the weather will not be good in Idaho in November, right?
Interesting.
So they allow themselves to hedge their non-financial thing. That's financial because it's their life, but like their specific setup with predictions around like weather, right? And I've actually heard that that is starting to gain a lot of traction, both inside, like, I don't know about inside crypto, but like outside of crypto, at least. Like there are people both looking for this vehicle, and they're actually starting to get some decent size on it. And a lot of that actually is around like weather weather specifically. Like using that as an example, there was a big storm that came through and blew up America. Like it's just been wrecking everyone. And what was it? There's a certain mineral that actually even spiked because we had like a unusually warm winter here on the West Coast, and because that blew up and everyone had, we had one like month of like just our week of just crazy cold. It basically wrecked all of the whatever. It wrecked all the people that are providing heat because they needed some specific element to do the thing, and it threw off their books, all their forecasts and stuff. Their projections for the month got wrecked. So they're wanting to be able to hedge stuff like that and say, hey, like if, especially insurance, effectively. So I'm interested in that, and I do think liquidity is a value prop. That's exactly what Legendary was getting to there, right? Saying if Hyperliquid can continue to attract liquidity just by being adjacent to it, it has a higher probability of flowing over into it, people using it. So I'm interested in seeing how that plays out. Now, I'm also somewhat skeptical of the iteration pace that they can have. That was my problem with HIP3, because this would all come through. Well, I guess it maybe wouldn't go through because they integrated the BLP in Hyperliquid, right? That was like lending coming into the Hypercore. So I would be curious to see what the actual underlying construction of that is, and if it is purely just like a Hyperliquid team gets to pick a market and go for it, or if it's just opening up a vehicle like a HIP3 where anyone can build a market inside of Hyperliquid.
That's a great question. Maybe they take the HIP3 model and just apply it to predictions as well. I don't know. Let's see. That's super interesting. One further application of this kind of exotic hedging would be, maybe because my mind is moving towards real estate soon, and the world's getting more volatile, right? So say you wanted to take a big amount of your portfolio and put it into real estate, but you're concerned about a region, or you're concerned about the particular market that you're going to enter into. And again, it's kind of morbid, right? But you have to think these things through. When you think about conflict, for example, the damage that might do to your real estate in a particular region. I guess when you're talking about conflict on these markets, being able to hedge and say that you think that there would be conflict, or that the one particular region is going to have more conflict than another, could kind of offset the risk that you're taking by buying into that region. This is just a random example that's coming off the top of my head. I was also thinking of London and the outflows of people. And so if you were going to buy in London, but you're thinking, oh gosh, it does seem that loads of people are moving away, I'm sure there might be a market on like how many people are going to keep leaving London, how many people are going to keep leaving UK, like what are the outflows, what are the inflows, net migration. These would be interesting stats. Like you could find the right stat for your asset. You just might need to like play around with it a little bit.
Finding your right stats, that's the liquidity fragmentation, right? That's where it gets tricky, right?
Yes, you need to find a popular enough market that matches your
find
asset.
the level.
Interesting. That's really interesting. Okay, before we get to the main headlines, I just wanted to talk a little bit about trading the market at the moment. As I said, there's a bunch of people in our Telegram group. We have almost 250 people in there chatting, going through the market together, trying to navigate the market. And as Legendary said already, it's a very, very challenging market at the moment. And I think I'm just going to share like some of the ideas that I've had recently in trying to navigate the market in general. Again, risking off beforehand is the thing that makes it all okay. Like not having too much risk on when you really don't want it is the thing that makes it all okay. So that's like the pre-preparation. But even now, the thing that I'm finding that is working well for me, so I'm not saying this is going to work for everyone because you could chop yourself up like this. The thing that is working for me is cutting trades that I do not want to monitor, or that I'm thinking this is no longer the thing that I thought it was. I want to go back to being neutral. I've done that multiple times over the last week where I entered hype in big, reasonable size and just got out of it. It was for a loss, but I realized I didn't want to hold it at that price anymore. Things were coalescing in the world with, we'll go through it in a second. The amount of news that dropped over the weekend, even that's encouraging all of the volatility and uncertainty in the world is peaking, where it keeps going up. So being very comfortable, but I still ended the week up. but that's because I was in certain trades, cut the ones that might have been at a loss, but I'm not forcing. I feel like I'm not forcing the market to do what I want. It's just like, look, this is what the market's giving me. It's not looking. This trade is about to go pear shaped, or it might go much worse. And just get out. Just get out of it before it gets any worse. I'm still up on the week, so kind of thinking like with that perspective, like on a holistic thing, it might not feel good to get out of this trade, but in a broader perspective, it's still net good for the portfolio, and just being comfortable. And I'll go back to like that story of my Hypercat NFT, which is the one where I bought for way too much money. I realized that I lost it. I lost some money on the trade as I traded out of it, but it was still an outstanding. I keep thinking about that as my almost like the defining trade of my last year or something, because I saved so much money and I was so happy that I saved the money. Like I think sometimes minimizing your losses is better than making money. And I think that's like being in that mind frame is what I think allows you to keep building over the cycles. And like, oh, you know, this is only maybe the end of my second cycle, but I think that mindset has been helpful. Ledge, coming to you for some reflections there. Any other thoughts on how you have approached it that might be helpful to people listening in, maybe going through something today?
Yeah, absolutely. The cutting trades point that I mentioned is incredibly valuable, because I feel like this is emotionally hard to do, right? To accept that you've been wrong about something, or you have not been wrong, and the market changed, however you want to frame or word that for yourself, and then change the course of action. And I think for me, similarly, it is the realization that I don't want to trade this market right now on the short on the short-term time frame. Probably I'm not good at it. It's too volatile for me. I feel like I know that I'm good at identifying early pipes, getting interested in stuff early on. The cloud bot, the mold book thing, and that also had tradable implications. Now I did not trade them because I was just too busy and obsessed with building my AI stuff. But I think it's also like realizing after a couple cycles in this market, or years in the market in general, what you're good at and what you're not good at, and trying to map that with market phases, and trying to deduct your trading plan from that. And I feel like I'm good with my general thesis that I still like gold as an asset, but I'm not really good at trading the gold volatility right now and being short on the weekend, and then like trying to catch this V spike bottom and trading on the way up. So realizing that there's maybe market setups where I'm not a good short-term trader, and hence just finding something else to do in that time.
Completely agree. And knowing if you are going to be hyper short term, like what part of your portfolio is for hyper short term stuff versus what we are probably known for being better at, which is that medium time frame. We've always said on the show, the 3 to 6 month range, like identifying for the 3 to 6 month has always been, I think, what we're best at. And like feeling the trend, knowing what the next wave to ride might be, ideally the easiest wave to ride, but then knowing like, okay, well, fine, I want to play around on Trade XYZ, or I want to play around with Ostim. How much do I want to put in, and how am I going to manage that and make sure I try to minimize my losses whilst I farm an airdrop, whilst I hopefully make some money at the same time. So just knowing what game you're playing at each different time, I think is super helpful. So hopefully that's some helpful perspective for people thinking about it, because it's a tough market, guys. Honestly, it's a tough market. Don't beat yourself up too hard. This is a hard market at the moment. Right, let's get into the main headlines. Ledger's going to take us through the main move down on Bitcoin. Then Brad's going to talk to us about ETH and our good friend Tom Lee. And then finally, I'll go through the Wall Street Journal report. Ledge, what do we need to know here?
Yes, absolutely. Let's take a look at what has been happening. On Friday, we did say that Binance switched their Seifu fund from just purely being in stables to moving that into BTC, but also to rebuy BTC in certain market conditions. This is what they did do over the weekend. They did acquire 1,315 BTC, aka 100 mil worth of Bitcoin over the weekend. But what also has happened is that Bitcoin did crash significantly under 80K, went as low as 75, 76-ish K, did fall even on the Sailor's average purchase price. So he is, I think now he is above that purchase price again, but he was under the purchase price multiple times over the weekend too. That on the crypto side of things, I think also maybe important to mention that we've seen 5 billion being liquidated over the last 4 days, with one day alone seeing liquidated longs over 2 bill, to put it that day basically at 2x the liquidation volume that we've seen with the COVID crash. So it has been a very, very intense weekend, but it has not only been intense for the crypto markets, because gold had a similar story to tell. Gold did go as high as 5.5K last week when we talked about gold hitting all-time high after all-time high. Similar story for silver. Silver went to $120. Both of them crashed. Gold went as low as 4.4K, silver as low as $70. But now the interesting part is that both assets on the one-day chart, which I'm currently sharing on screen, are showing a very strong recovery. Gold basically is up from its bottom back to 4.8K, which means it's up 10% from this local bottom that it did find in less than a day. And silver is up from $70 to $84, which puts it at 16, 17-ish percent recovery, which is pretty crazy to see. And even if we zoom out on the 30-day charts, I think it becomes more it becomes less apparent, that V-shaped correction, but it also becomes more apparent how heated this rally has been, because that whole move from 4.4 to 5.5K happened within a month. And for silver, the whole move from $75 to $120 also happened within the last month. Another thing I want to touch on before I want to bring up an article is the Dixie chart. Let me just, there we go. Scroll down on that a bit. As the dollar is recovering, the dollar is up 1.28% against the benchmark of other currencies over the last 5 days. Went as low as 96.1-ish, now recovered to 97.1. So the dollar is recovering. But at the same time, also gold is recovering, which is, again, it's a hard market. It's weird. Typically, these things are not moving hand in hand like that. Also checking in with the spot market, with the stock markets, for that, with the pre-markets. Again, we're coming out of the weekend, so as always, pre-market volume is lower than spot volume in itself. But Nasdaq futures, most notably, are down 63 base points. So it will be interesting to see what the markets will do later today. And then finally, I want to bring up this article from, there we go, from Garrett Bullish, who has been liquidated over the weekend as well, and his thoughts on why BTC and ETH haven't rallied with other risk assets. Basically, it's a very long article. It's worthwhile reading, but the main thoughts are this deleveraging cycle, or this deleveraging decline, began in October. October 10th also happened. It caused heavy losses for leveraged participants, especially retail traders. Speculative capital was wiped out. The market structure got more fragile. And at the same time, also interest did increase even more for AI-related equities. China, Japan, Korea, and US equities for AI surged aggressively. It's also quickly touching on time horizon, saying basically over 3 years, we are underperforming when it comes to BTC and ETH. Over 6 years, we are outperforming. Rotation is obviously normal. But the main point for me is get to the bottom of this, in the real reasons why BTC, ETH, in Garrett's opinion, has been underperforming, is that the market is nearing the end of a deleveraging cycle. Participants become more and more nervous to the downside risk. And crypto still remains dominated by retail investors. Yes, we've seen more institutions coming in. But that's the point that's interesting for me, is that ETF flows largely reflect passive sentiment following, rather than active conviction-based investment on the one hand. So the ETF buyers are not there because they're like so bullish on BTC or ETH in itself, but they're just following that sentiment around these assets. And then on the DAT side of things, DATs build positions passively, either directly or through third-party passive fund managers, using non-aggressive algorithmic orders like VWAPs and TWAPs. that are designed to minimize that volatility. And this is in sharp contrast with the more speculative funds who want to see the intraday volatility, currently mostly to the downside in order to manipulate that price action. And as a final layer for that you have retail traders using 10-20x leverage that creates opportunities for exchanges, market makers, speculative funds, other more professional assets to exploit that market structure and profit from that.
Very nice. Very nice summary. Appreciate the summary, Ledge, as always. I think a lot of people are coming around to that view that I shared a while ago, which is in addition to the things that I just mentioned there, but I think the thing first and foremost is that crypto is not the vehicle to speculate the most on the hottest next technology anymore. It is a current technology, which is excellent. It is being integrated into all kinds of rails for business. Banks are getting involved. It's an excellent technology. It is now proved to be excellent. People like the technology a lot more than they did before. But the point is, there's no need to speculate on that. It's already been decided. And in the previous cycle, I think it was the hot next new thing. Whereas now, a lot of that time, energy, attention has moved into whether it's AI, space, well, probably those two things primarily. So I think that's the first thing. Second thing, Ledger, I was interested by the thing you said on leverage. I just shared a tweet with you in our chat, the production chat, and there's just a chart which would be helpful for you to bring out. If you click on the chart here on leverage traders, this is shared by Jez, who's like expert leverage trader, although he's blown up a few times and then made it all back a few times. I think this is what him showing the trader's net PNL on Hyperliquid. You know how we talk about on Pump Fun, how the whole industry is wrecked because everyone just gambled everything. And of course they're going to leave if they just lose everything. There's a non-zero chance that the exact same thing, whilst everyone is super bullish on hype, it is true that it is an outstanding product and it is going up and it's doing very, very well, right? But if everything gets pushed into leverage, this is showing a net, I think 70 million. No, this is, I'm not sure what the number is here based on this chart, but basically.
Yeah, I guess one is volume and one is the actual P&L.
Traders net.
Yeah, that's the cumulative P&L.
Is it cumulative P&L on the right?
This one is
Yes.
the cumulative one.
Okay, so I think it's down 70 mil, which that doesn't sound like a high number. But my point is, there's another chart going around at the moment, Ledger. I don't know if you'll be able to find it in a separate browser or something, but there's another one showing like the 8 biggest traders on Hyperliquid who had the most have all left. And I think one of the ideas Jez was showing was that like there's no such thing as like a profitable leverage trader. It's just you're alive long enough. If you stay a leverage trader long enough, you die. It's the same thing about the villain thing, right? Like what's the expression? I'm going to butcher it.
Yeah, you be a hero long enough to be a villain, something like that. Yeah,
something like that.
You could die a hero, or you can live long enough to be
become a villain. It's kind of like that with leverage trading, where in the end you're going to lose the money. Is the suggestion, because it's a really, really hard game, and if you keep upping the numbers, this is the one that they're excellent. Click on it. So so this news, just scroll to the top so I can read it. Oh, here we go. 8 traders once made huge profits on Hyperliquid, but every one of them ended up getting wiped out. Top 3 losses: 128 mil, 37.6 mil. 14 win streak trader ended up losing 30 mil. So look, I know this is the extreme. This is the top end. I know lots of people might not be operating at that top end necessarily, but it does show that the danger involved, and that's going to say. I guess my point is we criticize Pump Fund for like the extraction, or everyone's losing money, but we don't quite propose that same thing at Hyperliquid. And I'm a big hype fan. I think it's an awesome product, but like it's still leverage. It's still pretty crazy gambling. And so I've just never seen that position be put to Hyperliquid. Brad, what do you think about this idea?
Yeah, I think about it. I like it's true in isolation, where it's like I feel like in the perps vertical. Remember, I complained for a couple of months. I was like, bro, I'm getting hunted. There's some shit going on under here, and I feel like people are going after my specific positions. It's like I'm literally getting wicked, and I hate it because like, you can see some stuff. So like there is definitely a different degree of sophistication in this. Not to say that we don't have it in the other sectors, like the memes, whatever. Because like this is offset to me by where everyone else is making their money. And you keep seeing these like giant numbers of people making bags doing meme coins, which is way further down the risk curve, like basically on Vanguard. So in a complete ecosystem, which is blockchain, crypto, like there are pockets that smaller retail traders can get to early and therefore get crazy outsized gains. They then take those outsized gains to the dark lands, which is this, and then they get stolen from them. Eventually, if you get too greedy, do it for too long. So like if you only look at like the casino, the bad spot, the whole place is a casino, like that's the meme. But like if you only look at like this pocket, like yeah, success rate is bad. And honestly, it's a business. So like you need on average people to be losing money so that the thing is profitable, because Hyperliquid itself has extracted, X amount of dollars, right? A lot of money. So like you need this for a complete ecosystem. You need the downside, but you also need like the evergreen, like people making a lot of money. Maybe it's a little bit easier. Not to say that the trenches are easier, but like you need these other pockets, NFTs, you need meme coins, you need perps, you need whatever, and you need people to be able to bounce back and forth between all these different sectors to make money and then be able to lose that money. Like you need velocity. So it's probably a good idea to like not put the gas on the throttle too hard whenever you go into the perp world. And like if you are winning, count your blessings, and you know what, maybe you should cash out. But like this type of thing is needed for a complete ecosystem.
And the thing is, we learned this lesson. We learned this lesson in TradFi, right? You have CFD platforms, contracts for different financial derivatives, which get heavily regulated because 80% of people are losing money on that. Now I think it's like 60 or 70%, but they regulated these platforms, and they realized that it doesn't really. It's too dangerous for retail. It's like just too tempting to think, oh, I could be up. Oh, if gold moves up 10%, but I'm sitting on a 20x leverage, I could triple my money doing that. And then on top of that, you have the very transparent order book where someone who's more sophisticated and you can come in and still make you lose money, even if your directional thinking is right. Best example for me was thinking that Monad at 5-6 bill, whatever it used to trade on a Hyperliquid, is absurdly overvalued. There's no way this should be worth that much. Let me short that. And other people started thinking the same until someone came in and pumped that price to 8 bill, liquidated the shorts, and then it corrected and dumped. So even if you're directionally right, you still can lose money there because there's people who are more sophisticated than you, and they will exploit your lack of sophistication that I don't have trading perps. Plus you have all of this transparent set of things where it's even easier to manipulate these markets. So in this article or in this post that you had by Jess previously, in the comments he also said, right? I think it was Kobe who said, imagine if you retards bought spot instead of longing on leverage and getting liquidated every 5%, which sums it up pretty much. And another observation now, as a result of this, which I didn't notice before we were going through CoinMarketCap, is crypto fear and greed index is at 15, right? Stocks. So we are in extreme fear for crypto, but stocks are still in greed. Stocks are still at 57. So stock market is driven by greed and crypto is driven by extreme fear. So the discrepancy has become pretty high.
Very interesting. Just one final thing, trying to tie this back to the bigger question. We got kind of, I think that the leverage question is an important question. It's driving a lot of Hyperliquid's success, obviously, and that's like one of the main things we talk about now for why it is successful. I'm thinking through like its second order effects for the rest of the market. But is there anything else? Okay, so actually, I'll just mention a ton of other things. There's this tweet from Gum. I think it's, I don't know, Ledger, I'll put it in the Telegram. Just for people to give some context of why we think this market is so hard at the moment and why sometimes you just need to get out of the way and manage your risk. Gum asked, what happened this weekend? And this is the variety of things that just happened this weekend. And I think the first one might not be correct. I'm not 100% sure because some of it's related to the Epstein files, by the way, which we haven't touched on. We're not going to go into it in detail. but to the extent that it is going to affect markets, we will touch on them. It says Pompliano isn't. So these are things we found out this weekend. And parenthesis, this is, if it's mentioned in the Epstein files, it might not be factual. It's alleged, or some of these things are reaching conclusions based on some things which are read. They're not definitive. Pompliano is an Iran informant, threatened Epstein. Epstein files describe Saylor as a zombie on a drug. Justin Sun's ex, founder of Tron, is currently snitching on him on Twitter by claiming to have all kinds of information about how he achieved the amount of money that he has, and being willing to provide it, alleging that it was done by whether illegal or nefarious means, by spinning up lots of accounts under employees' names. CZ is also under attack still. Came out to say that they're going to be buying $1 billion of Bitcoin over the next 30 days. Garrett Bullish, as the article Legendary just shared, got liquidated on over $700 million of longs. And I don't know how much people have been on top of the Epstein file stuff, but in our Telegram chat, when we talked about it over the weekend, I just thought, like, the market's hard already, right? The market's hard already. There's conflict in Iran, Middle East. The Greenland thing seems to be settling to some extent, or at least it's been forgotten about for a moment. Tension with Europe and America has never been higher. And now these Epstein files have just got thrown into the mix, where all of these CEOs are getting mentioned. And again, they're being mentioned. That doesn't necessarily equate to guilt of anything. However, it's just feeding the mix of tension and instability. And you look at some of the other discussions around ICE and the domestic instability in the US as well, around some of the kind of forced deportations and the violence that is accompanying that. It's just creating like this really, really hard mix. And I think sometimes, as we've kind of alluded to here, sometimes you got to get out of the way. Remember in the market when CZ and Jeff from Hyperliquid were like going at it, and Asta came out and they were kind of fighting around, which, by the way, that was another great call we said on the show. Like, you need to get out of these guys' ways. They're going to tank the market. And Asta was part of that bigger decline, right? So a lot of stuff going on. Brad, do you want to close off this topic? I don't know if you were entrenched in the Epstein files. Hopefully you're just playing with your AI agents over the weekend in peace. But do you have it there?
Yeah, I did see it, which is like, it's a shit ton of files, and we have AI now. AI is great at analyzing loads of data. I'm sure there's more and more stuff that's going to be coming out of this stuff as other people manually comb through it, but also AI is just like looking for aggregate things. The thing that's actually interesting to me, I was going to send it to you, is the CZ canceling the super cycle because CT FUDs them. Yeah, it's just like people have an audio clip that they dropped of CZ, and he's like, you know what, guys, like, I'm trying to be good. I'm trying to be good, but I don't know that I believe in the super cycle anymore because CTs, they're fudding us. They're fudding us, and that's just not how you do it. So
it's kind of true, to be fair. Like, if everyone's going to FUD the whole time, then of course the assets can't go up. But I know what you mean.
Yeah, it's like that's a Trump interpretation style thing where, like, he says that thing, some are going to say it's 4D psychological, philosophical approaches. Like, yeah, guys, if we don't have a joint sense of direction, then of course we can't. The price is going to go because no one believes in each other. Or you can just take like the purely like literal, like he thinks he's so powerful, he's canceling the super cycle. So like he's just going to bring the whole market down.
Yeah.
So it's it's whatever you want it to be. The totally unfollowing him and then the soul pricing after it, like, that's just funny. So I don't know if I don't think you even read out that one specific, but it says totally unfollow CZ, somehow sold dumps from 117 to 94 the day after.
Yeah, I didn't read that one. I was like, I don't know how.
Coincidence, funny. Yeah. And I'm guessing he did that for whatever reason. Okay. That's where my mind goes.
All right. So as we said, guys, hard market, a lot of stuff going on. We're trying to navigate it the best we can, and we do it every day on the show. Brad, talk to us about ETH. Our good friend, Mr. Tom Lee. You're going to talk about ETH, and I'm going to do some of the Wall Street Journal report. What do we need to know here?
Yeah, yeah. I mean, the headline's brutal. So, Tom Lean's BitMine ETH portfolio now down over $6.9 billion. And it's a screenshot from DGen News showing just the portfolio balance currently sitting or started total invested 15.6 billion, and they're down 6.9 billion. That's a lot of money. There's unfortunately not a lot you can talk about with ETH specifically, right? Like you can't say there was a reason this happened. It's just crypto as a sector has been getting bled out a little bit, and he is very heavily into one specific asset, right? That was his mandate. That's what he's doing. He's been doing BitMiner, which is a DAT specifically for acquiring ETH. He is the calling for the $100 gajillion per token bull, but he's notoriously done that for several things in the past, and it looks like this one might not last. Now, not might not last. Like this is gonna be fine. The big question with all these DATs is, can they continue to hold on to their assets, right? Are they ever going to be forced into a position where they need to liquidate what they hold internally and then exacerbate what's going on in the market? Most of them should be fine, but they're like the lesser vehicles. Like Tomley's not gonna have to liquidate his portfolio. Like he could probably sit on this stuff for a couple of years without worry, especially now that he's starting to diversify a little bit, which can maybe help him out a little bit. I mean, we talk about a couple $100 million you put into Beast Industries. You see numbers like this and you realize that's basically nothing. But the big question is, will they liquidate to exacerbate? He won't. Other smaller DATs are probably in similar percentage-wise positions as him, and those might actually start entering in the realm of needing to be acquired by a Michael Saylor or maybe even a BitMiner, right? They may buy these other DATs, sell them off, and then use them to buy up their own assets to bring their cost average down.
Fascinating. Okay, excellent summary. I've just seen that Tom Lee was on Squawk Box this morning. I think this is a quote from his morning appearance. He said, "I think as long as crypto fundamentals are good, then crypto prices should follow. You'll be all right, guys. That
I mean,
the fundamentals are good. However, I would. Let me say one thing, Brad, and you come in, because I think the exact opposite of this idea is the increasingly, maybe not just popular idea, but maybe increasingly proven right idea is that of Santiago, who is building Inversion at the moment, where his big point at the moment for crypto is that the fundamentals are excellent, adoption is increasing, but just like with the internet, when those two things happened, it does not necessarily mean that the underlying price of X, Y, or Z asset will go up. Adoption will go up, but these speculative vehicles won't necessarily go up with it. And his point is that they definitely won't. Value will get captured elsewhere, and crypto fundamentals are excellent. It doesn't necessarily mean these assets are going to move up. So that's the diametric opposite, right? Because Tom Lee's saying fundamentals good, price will be better. Santiago is saying fundamentals are good, price will not be better. It will get captured in other places, but these specific assets will not necessarily go. I lean towards that view at the moment. Brad, you wanted to say something? Then I need to do the final headline in a moment.
Yeah, I'll try to speed run it. We're just saying, you were bringing up crypto fundamentals. So this isn't specific to ETH, but it's just, is crypto going to be used? And like, that's what's scaring some people now. Fundamentals, are they going to be used? Is it going to be profitable? Is it going to be whatever? I crashed out a little bit. I saw FedGrad crash down a little bit of, oh my God, everyone has these AI agents and they're giving them their personal details so that we don't even need crypto anymore. We don't need permissionless finance because everyone's just going to hand over their credit card to their little fucking bot, right? And that'll be enough. Like, we don't need anything. But as I continue to go down this rabbit hole, like, it's absolutely going to be needed. As I continue to build out my little dude, I can sign up for GitHub. I can sign up for an email. I can sign up for a Netlify account. I can't give him his own credit card because he's not a fucking person, right? He can't like have any of those things. So crypto will always be better for a permissionless finance. And as we continue to go down this AI rabbit hole, the perfect pair that I've been saying and is showing to be the case here is permissionless access to finance and verifiability. So I remain very bullish on the fundamentals of crypto, TBD on where it actually flows to, but it's absolutely going to flow to an AI focused world.
I think that's going to take way longer to get there, though, because think about Revolut, other neobanks who have child accounts with very hard restrictions in there. You could basically, it's way easier to set up an account like that for an AI agent, which has hard limitations, than set up a smart wallet that is limiting the potential of your AI agent to a degree of risk exposure that you'd be comfortable to handing that money to your AI agent. I agree with you in principle, but I just think the journey to get there, and where this permissionless world can be handled by an AI agent with a user experience and complexity that is able to be handled by the majority, is a long way to go, because now basically nobody is using AI agents at large scale, and us using them are even not finding it too easy. I told you, when I gave my AI agent a wallet, now you can, I was obviously stupid about that. The first thing he did is created a nested wallet, sent the funds there, and forgot to track the private key, and all the funds were gone. So he was like, oops, sorry, I just lost your 2K. It's like, but if you let me try again, I'm not going to repeat the mistake. Yeah, okay, I was stupid doing that, but I'm also, I would say, probably a bit more advanced than most people are with that tech if you compare to the general population. So for us to get there, it's gonna be quite a while, and I feel like in the meantime, it's way safer to give him a credit card and hard limit in the app that he can spend more than X amount of money a week, a month, whatever, and to limit my risk exposure like that. But generally, I agree with you. I just think the journey there is way longer.
Interesting. Okay. And ETH is taking steps to focus on, well, two things. One, quantum, which other chains are being either slow on or resisting, and focusing on agents. So I'm kind of bullish ETH for that reason. Again, market is awful. I'm not saying buy for that specific reason, but I like that I see them building with that view in mind. Final headline. We're running a little bit over time here, but let me get this one for you. This headline is that the Wall Street Journal reported that Trump's World Liberty Financial signed an agreement for $500 million investment from an Abu Dhabi investment vehicle 4 days before the inauguration. This is important because it seems like it's not just about there being a stake in Trump's World Liberty Fi. It seems like it's about a separate deal for AI. So in summary, this is shared by Tier 10 on Twitter. Lieutenants to Abu Dhabi Royal Sheikh secretly signed a deal to purchase 49% in Trump's family cryptocurrency venture for $500 million. The deal was signed by Eric Trump, the president's son, 4 days before Donald Trump's inauguration last year. The buyers paid half up front, and $187 million went to Trump family entities, and they named the entities in this article. At least $31 million was also slated to flow to entities affiliated with the family of Steve Witkoff, who is a World Liberty co-founder who weeks earlier had been named US envoy to the Middle East. And I think the reason why this has been considered to be a very important point to focus on, it's probably twofold. One, in the article, it suggests that this is unprecedented for a kind of external government official taking majority stake in an incoming US president's company. Maybe these structures have never even existed before, but even still, the suggestion would be that this is a deep conflict of interest to be accepting this type of investment from this external entity. And then what it led to, well, we don't know if this is the direct thing, but this is what is being suggested. 2 months after the March meeting between the Sheikh and Trump administration officials, the administration committed to give the UAE access to around 500,000 advanced AI chips annually. Now, we do not know. We're just reporting what has been reported. We do not know if this is confirmed, and we don't know the causation or causality of these two things, right? But I think the reason why people have reacted so strongly against it, because World Liberty Fi, from its outset, has always left people in crypto with a little bit of a bad taste in their mouth. Even if you take this foreign direct investment out, even if that wasn't there, I don't think people in crypto necessarily liked that the sitting president, was going to be in charge of pushing the industry forward, which obviously people did like, but did not necessarily like the fact that they're going to simultaneously profit in a big way from the laws that they're passing. So kind of positioning themselves to profit in a big way. And then obviously in this particular case, the fact that there is this AI component where the deals that were struck, it might appear, or it is being alleged that it led to these AI chips, that confuses and complicates the matter significantly further, right? That goes beyond just someone trying to profit off their office. That just takes the matter and really elevates it to something much deeper. And I think if you put that in context with all of the Epstein stuff going on at the moment, and the suggestion that different people are potentially compromised in some way, or whether different people, big money's been moving around between big entities and big people for some time. I think it just complicates it much further. So that's why I think people have reacted quite strongly to this from within crypto and outside. And it kind of underscores the World Liberty Fire project and makes people feel, I wouldn't be surprised if this is at least in part, this kind of news, I think, is not going to turn around the price action, for example. Like, I think the way we spoke about it back in the day, whether it was a few months ago, was more like there's something poisonous about it gave it like a really bad taste in the mouth, I think, this type of deal. So doesn't help the crypto sentiment, I don't think. That's where we are. Maybe a quick reflection from you guys before we close out here. Ledge, any specific thoughts before we close out?
It's going to be a difficult week in the office for President Donald Trump with all of these things coming together, and that will probably add more volatility and pressure to the market, which is not good.
Maybe in some ways there's so much going on that each different thing can kind of be compartmentalized and dealt with at different times, because there's, as you say, there's so much going on at the moment. Brad, maybe a final take before we close out here?
We'll be fine. I'm gonna give you guys calm. Everyone's gonna be fine. It's really not a big deal.
It's gonna be fine, guys. It's gonna be fine. There we go. All right. Well, we ran a little bit over today, but I hope it was helpful. Kind of had to go around the houses and deal with a variety of interesting issues. And as Brad said, it's going to be fine. We do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify podcasts as well. We hope you have a wonderful day. We'll be back same time, same place tomorrow. See you then. Bye-bye.